In this video, we will talk about Vaxart, why its stock price recently plummeted, what it means for the company, and if you should buy its shares. When we look at the recent stock price movement for Vaxart, we can see that the company has been in a massive bullish run since the month of June 2020, from $2.70 to a peak of $23.45 in January of 2021. However, recently, its price took a nosedive, down to around $9.50 level, which is the same zone back to the period between September and January of 2021. This recent price action is the result of a failed attempt to develop a vaccine to fight against the current global pandemic. The vaccine developed by Vaxart yielded very mediocre results in the tested subjects, certainly not enough to qualify to be authorized by the regulators. Vaxart is a pharmaceutical company specialized in oral vaccines. The project is very interesting and has a lot of potential because oral vaccines have much lower storage and medical personnel requirements compared to conventional vaccines in order to be administered. This technology can be very promising in the context of rapid and mass-scale deployment, especially in the remote or underserved regions and communities. What the recent developments showed is that Vaxart is onto something promising, but the technology seems to be still too fragile and immature to be deployed, at least not in the current context. With that being said, the company has also proved that its efforts have produced useful products, such as an influenza vaccine that seems to be as effective as the conventional vaccines. This means that in the future, when technology matures, this technology can be a game changer in the pharmaceutical industry. Now, some people may be wondering, how can a small company like this one compete against the industry's behemoth, such as GSK, Pfizer, and Johnson & Johnson? The answer is that the company will not compete against those companies, but instead work with them and make money through the sales capacities of those established companies. Once they have the technology, they can license different products and technologies and then collect royalties without spending fortunes on sales, marketing, and manufacturing. In fact, we can already see this tendency in the financial statements of Vaxart. Contrary to many other startups, it actually has revenues, and revenues that are fairly important relatively speaking. Although it has decreased from 2019 to 2020, it is the nature of this revenue that is important. Vaxart is actually the merger between Vaxart Private Labs and Avirogen. Avirogen has previously developed a few patents and had GSK to manufacture and sell the product. This is a pre-taste of what relationships between major pharma companies and Vaxart can be. Once it has developed a new technology, it does not have to invest massive amounts of capital to produce and market the vaccines, but instead licensing the technology and collecting the royalties instead. Some other aspects to look at are the cash reserves and cost. The cash reserves have been increased by 10 times from 2019 to 2020. This is probably from the sales of common shares that the company sold during the year, since the number of common shares circulating has doubled. Given that the company is still having an operating deficit and that it still requires large amounts of capital to continue its research operations, I think that this is an indication of what is to come in 2021. The other aspect to watch out for is the admin and general cost. According to the financial statement notes, this expense is purely administrative. What worries me a little is that it has doubled from 2019 to 2020. Going forward, it will be important to see if Vaxart can control this cost. In terms of the number of institutional shareholders backing up Vaxart, they collectively hold 36 million shares, which is a major increase from the 20 millions reported in the previous reporting period. Some of those institutions are household names such as Vanguard, BlackRock, Citadel, and Goldman Sachs. Overall, those institutional investors are holding their exposure to Vaxart. In fact, it is interesting to look at the timing when many of them started to buy the Vaxart shares. Their entry point was usually before the stock began to take off, before everybody started to talk about them, when it was still in the penny stock territory. This means that when we choose to enter a position, the surrounding hype may be the last thing we need, since by this point it is often too late to buy. On the other hand, if the stock price is hitting much lower prices and the noise surrounding it is pessimistic, it would often be worth checking the stock if it is at a good price level to enter. Now let's take a look at the options. The current market consensus seems to be that the stock will probably go higher in the future, especially when we look at the contracts expiring in March. The number of call options are much more in demand compared to the put options. This means that investors are more interested in having a right to buy the shares at predetermined strike prices than the right to sell these shares. The strike prices that are important are spread between $6 and $10. Before we move on to my recommendations, if you like my content, please like, comment, and subscribe to my channel. My recommendation to whether to trade the stock depends on your approach and your goal regarding Vaxart. If your goal is to hold Vaxart shares because you believe in its long-term potential, then the risk tolerance would be lower, but the trade has to be structured differently. If your goal is to swing trade and to take profit off the short-term catalyst in the race to a vaccine, then the risk tolerance would need to be much higher. So, in the scenario of short-term swing trades, the opportunity to enter in a position is probably now. The speculation will probably build up around the possibility of a 2-dose vaccine that Vaxart is currently developing, and there will be a run-up before the result is published, regardless of whether the result is positive or not. The second approach ignores the current risk and rewards, but concentrates on the long-term outlook of the company, then assumes that Vaxart will be a game-changing element in the pharmaceutical world when it develops one of the first oral vaccines in the world and licenses the technology to other companies. In that case, the trade should be built in a way so that each addition occurs when the price is at a relatively low level, also called a support level. The price target for the short term is around $25 within the next 4 weeks. The long-term target should be in the $40 to $50 zone within the next 12 to 24 months. Because this stock is still in its relatively early phases, I would suggest to keep the exposure below 2% of your portfolio. Thank you very much for watching. If you like my content, please like, comment, and subscribe to my channel.